Stop whatever you are doing. Urgent. Today, and we are witnessing a mathematically impossible financial bloodbath. The Iran war is rapidly escalating. President Trump is sounding the alarm on a global crisis. By every fundamental rule of macroeconomics, safe haven assets should be rocketing to the moon right now. But look at your screen. It is a complete paradox. Shocked gold has been violently smashed down to $4,500, and silver just crashed below $70. Bitcoin and tech stocks are bleeding out alongside the metals. The mainstream media claims this is just a normal reaction because the Federal Reserve held rates steady against hot PPI data. Do not believe that lie for a single second. As Robert Kiyosaki has been urgently warning his followers, what you are looking at is the ultimate clash between fake paper derivatives and real tangible wealth. This is a rigged, orchestrated margin call massacre. Over-leveraged hedge funds are drowning in bad bets. To raise emergency cash, they are liquidating paper metal so aggressively that it is now trading below the actual cost of production. When paper prices drop below physical reality, the fractional reserve system is mathematically broken. But while retail investors panic sell, Eastern superpowers like China and Russia are completely ignoring the paper crash. They are quietly backing up the truck and accumulating massive amounts of physical metal. They know this is a manufactured trap. They are using the broader market bloodbath as a smokescreen to drain Western vaults. If you own physical silver, Wall Street is running a psychological warfare campaign to steal your ounces at a discount. The disconnect between paper illusions and physical reality has reached the breaking point. Do not fall for the ultimate fakeout. Let me show you the exact forensic data proving why this crash is completely rigged. Before I expose the exact mechanics behind this massive silver trap, I need to know who the real critical thinkers are in this community right now. Drop a comment below with your country and your local time. This Friday bloodbath affects every single time zone. Pause the video, drop your location, and hit that subscribe button to join the smart money. Now let's open the case file on the ultimate gold trap. Look at the broader markets today. When oil skyrockets and tech stocks bleed, institutional hedge funds face massive margin calls. A margin call means they need emergency cash, instantly. They cannot easily sell their illiquid toxic tech stocks. So what do? They liquidate their most liquid, profitable assets, paper gold and paper silver. This is known as a severe liquidity crunch. It is a forced paper sell-off, not a fundamental shift in real-world value. Wall Street algorithms completely coordinate this paper smash to trigger your stop losses. They create a terrifying illusion of a crash to shake weak hands out of the market. But the physical reality tells a completely different, historic story. While retail investors fall for the silver trap and sell their ounces in pure panic, elite institutional buyers and Eastern powers are standing at the bottom, catching every single physical coin at a severe discount. It is the greatest wealth transfer mechanism ever engineered by the banking syndicate. They manipulate the paper price down to $4,500 and $70 just to refill their own empty physical vaults before the true inflation tsunami hits. So I have to ask you, are you going to be their exit liquidity, or are you going to hold the line? Pause, drop your answers in the comments, because understanding this liquidity crush leads us to the ultimate mathematical impossibility of $70 silver. Sarcastic Wall Street wants you to stare at the paper ticker, but they are terrified you might look at the physical cost of production. With crude oil surging aggressively back to $98 a barrel, the energy cost to operate massive mining machinery has skyrocketed. Exhales sharply. The all-in sustaining cost to pull one physical ounce of gold or silver out of the ground is currently at historic highs. Yet, Wall Street just violently smashed the paper price of gold to $4,500 and silver to $70. This means primary metal miners are now operating at a catastrophic mathematical loss on every single ounce they sell to the market. And mining conglomerates are not charities. When the rigged paper price drops below the physical baseline of reality, they simply withhold supply. They stockpile their own metal and refuse to sell it to the bullion banks at a manipulated discount. This instantly paralyzes the global supply chain right at the exact moment that industrial demand is exploding. Tech giants, AI data centers, and the military-industrial complex absolutely require physical silver to function. They don't care if the screen says $70 or $170. Their demand is entirely price inelastic. Wall Street can print billions of fake paper contracts to suppress the spot price and trigger retail panic. But they cannot print physical atoms of silver to satisfy a tech giant demanding a 10,000-ounce physical delivery. This is where the fractional reserve illusion fundamentally shatters. The $70 price tag is a psychological weapon designed to steal your wealth before the ultimate physical shortage hits. When the physical market completely disconnects from the COMEX paper ticker, we will witness an overnight revaluation that will wipe out the institutional short sellers forever. And if you think the COMEX will protect you when that happens, you need to see what the mega funds are doing behind the scenes right now. Look closely at the recent moves made by massive funds like BlackRock and JP Morgan in the broader financial markets. When liquidity dried up, they quietly imposed emergency withdrawal limits, locking investors out of their own money. Now, apply that exact same panic to the COMEX and LBMA physical precious metal vaults today. The disconnect has shattered the system. At $70, absolutely everyone wants physical delivery. But if you walk into a major bullion bank right now and demand 10,000 physical ounces of silver, they will flat out refuse you. Why? Because the physical metal simply is not there. We are on the verge of the major exchanges declaring force majeure, an emergency halt on all physical withdrawals. They will activate hidden clauses in their contracts, forcing you to accept a worthless cash settlement instead of your real metal. They're going to tell you it is due to unprecedented market volatility, but that is a lie. As top industry insiders like Andy Schectman have been warning, sovereign Eastern powers have been ruthlessly executing an arbitrage strategy, draining the West completely dry. The East buys paper silver at the rigged Western discount and immediately demands physical delivery in Shanghai. The COMEX knows they are trapped. The $70 price is nothing but a giant flashing neon trap sign. It is designed to induce extreme panic. They want retail investors to capitulate and sell their physical coins back to the banks, so they can use your hard assets to cover their massive, bleeding short positions before the vault doors lock permanently. When the news breaks that physical buying limits are enforced, the paper illusion will instantly vaporize. The true price of physical silver on the black market and Eastern exchanges will violently decouple from the rigged U.S. ticker, and the wealth transfer from the impatient to the informed will be complete. The countdown to the ultimate vault lockdown has already started. Plus, if you are a physical silver stacker watching this orchestrated bloodbath right now, you must understand one thing. The $70 price tag is a psychological weapon. It is specifically designed to make you panic and hand your wealth back to the elites. Exhales sharply. But look at what the true apex predators of this market are doing. China is taking absolute ruthless advantage of this manufactured crash. Just last week, our forensic data tracked China quietly moving $3 trillion in physical wealth directly out of Western vaults. They are aggressively hoarding their metals at this $70 discount, locking it away permanently outside the Western banking grid. When the exchanges finally halt deliveries and the physical shortage goes mainstream, this market will gap up faster than you can log into your account. So I need to ask you directly, what is your exact strategy going into this weekend? Are you holding the line and protecting your physical ounces, or are you letting the media terrify you into capitulation? Drop your exact moves in the comments below. Let the algorithms and the institutions know that this community will not be shaken out. Make sure you hit that subscribe button and turn on the bell notification immediately, because we are tracking this historic vault drain and paper disconnect in real time. The $70 trap is failing. I will see you in the comments right now.